గవర్నర్ మాట్లాడుతున్నారు. ప్రత్యక్షంగా చూద్దాం.
WLR on fresh rupee loans and outstanding rupee loans. There are two components. One is on the fresh loans that's now being given, and on the outstanding loans, they increased by 137 basis points and 80 basis points respectively during May to December. The weighted average domestic term deposit rate for fresh deposits and outstanding deposits increased by 213 and 75 basis points respectively. The Indian rupee has remained one of the least volatile currencies among its Asian peers in the calendar year 2022 and continues to be so this year also. Similarly, the depreciation and the volatility of the Indian rupee during the current phase of multiple shocks is far lower than what it was during the global financial crisis and the taper tantrum. In a fundamental sense, the movements of the rupee reflect the resilience of the Indian economy. On this matter of volatility and depreciation, I have provided some comparison with other countries, with the Asian peers, as I mentioned, and also I have given a comparison with the scenario which prevailed during the taper tantrum and during the global financial crisis. That is all contained in the footnote of my statement, if those of you who are interested may like to refer to it. I now turn my focus to the external sector. The current account deficit for the first half of 22-23 stood at 3.3% of GDP. The situation has shown improvement in Q3 22-23 as imports moderated in the wake of lower commodity prices, resulting in narrowing of the merchandise trade deficit. Further, services exports rose by 24.9% year-on-year in Q3 22-23, driven by software, business and travel services. Global software and IT services spending is expected to remain strong in 2023. Remittance growth for India in the first half of 22-23 was around 26%, more than twice the World Bank's projection for the year. This is likely to remain robust owing to better growth prospects of the Gulf countries. The net balance under services and remittance are expected to remain in large surplus, partly offsetting the trade deficit. The current account deficit is expected to moderate in H2, that is in the second half of 22-23, and remain eminently manageable and within the parameters of viability. On the financing side, net foreign direct investment, that is FDI flows, remain strong at $22.3 billion during April to December 22. Foreign portfolio inflows have shown signs of improvement with positive flows of $8.5 billion during July to February, led by equity flows. It has to be recognized that if you take the full year, it's in the, it is still negative. But the point I'm making is that from July onwards, the foreign portfolio investments, the foreign portfolio flows have picked up. Of course, it has seen a kind of a up and down, month on month. But overall, from July onwards, it is a positive inflow of 8.5 billion between July to February 6th. Net inflows under the non-resident deposits, and this is again important, net inflows under non-resident deposits increased to $3.6 billion during April-November 22 from $2.6 billion a year ago, boosted by the Reserve Bank's July 6th measures to attract inflows into the country. Foreign exchange reserves have rebounded from $524.5 billion on October 21st, 2022 to $5.6.8 billion as on January 27th this year, that is January 27th, 2023. And this covers around 9.4 months of projected imports of 2022-23. India's external debt ratios are lower by international standards.